British markets are heading lower amid the continuing fallout from the resignation of Prime Minister Liz Truss. The FTSE index in London has opened 0.2% lower to end the week. On the currency front, the sterling has lost more than 0.6% against the US dollar and the euro. Truss's downfall was the result of deeply unpopular economic program that called for tax cuts and therefore more debt on the back of taxpayers. Focus now turns to how the ruling Conservative Party plans to respond to the rising cost of living and slowing economic growth. Inflation in the UK rose back to a four-decade high of more than 10% in September, in yet another blow to corporate and household budgets across the country. Now, for more on the story, let's bring in Jameel Ahmad, Chief Investment Strategist for the Middle East at Alpari in Dubai. Welcome back to the program. Jameel, so what are investors looking for in the incoming government, whomever ends up leading it?
In a nutshell, stability. We've seen complete chaos in the British pound and the UK assets for a number of weeks now. We can't forget about that shocking moment late September where the British pound fell to not just generational lows, but lows that many of us never thought we would see at 1.03 against the dollar. Of course, since then, the pound is much more stable. We've got the British pound somewhat floated between 112, 113 over the previous couple of trading days. But investor confidence has been rocked and it's been hit. So what we really need to see now is stability. And I maintain the same narrative. If the British pound can sustain itself above 110 against the US dollar, given the ongoing uncertainty, then this is an optimistic scenario for the pound. But the situation is fragile. Nobody knows what's going to happen next. And I will not rule out the British pound returning below 110 against the US dollar should things take an uncertain turn for the worse.
Right, so that's closer to parity with the US dollar. Just what exactly does that mean for the British economy?
Well, we've already seen substantial and persistent increases in inflationary pressures, but the British pound weakness that we've seen over the past month or so has not been reflected in data. So immediately you would look at price pressures, where the UK is obviously a large trading economy. We cannot forget that the UK, regardless of its reputation being hit by political events, it remains one of the largest economies in the world and the financial capital of the world also. So as a major trading economy, we're obviously going to see increased import pressures when it comes to importing goods. And I would say that's the immediate impact on the pound that we're yet to see. But we already know that inflation's at its highest levels in decades.
All right. Jameel Ahmad at Alpari in Dubai. Thank you for joining the program.